All right, so we get to welcome Philip Eliot to us today. Philip is the managing director at Reflection Ventures. He is a venture capital investor focused on early stage companies with positive social impact, particularly in the areas of environmental sustainability, health and wellness, and socioeconomic mobility. And Philip, you want to say hey and introduce yourself more, feel free to.
Hey, I think that covers it. I've been a venture capitalist for a long time, mostly focused on early stage companies. So companies not quite as early as you all, but typically right on the cusp of getting their first customers, or maybe $100,000 of revenue or so. But that's certainly my focus for the last 20 years. So I think we're going to talk about financial modeling today and assumptions and how to come up with assumptions.
Absolutely. If you'd like, they can go through who they are and give you their 7-second pitch, or you can kind of do that throughout however you'd like, or we can just go ahead and get started.
Yeah, that'd be great. The 10-second pitch, just to understand kind of what the general idea of what the business are, would be great.
All right, so like you practiced with Maurice, I'll call you out since I see you in a certain order. Sarah Harold. Yeah, Sarah, go first. Sarah later. You're right next to me on the screen.
Hi, so I'm Sarah. I'm the founder of the Sustainable Socialite. We curate pre-loved vintage or vintage style pieces that are high quality to sell at an affordable price. And we're also converting to a mobile boutique to bring the product to the customers.
Cool.
Caroline.
Hi, my name is Caroline. I'm the owner and baker behind Sweets by Caroline. We're a baking business that specializes in custom gluten-free French macarons, as well as cakes, cupcakes, and other desserts that are perfect for engagements, weddings, parties, and events.
Harrison.
Hi, my name is Harrison. I run Morning Light Esports. What we do is everything a traditional sports organization like the Ravens would do, except in video games.
Doyen.
Hi, my name is Doyen. I'm the owner of Opalescent Nails, and Opalescent Nails is a custom press-on nail company for the book, the busy, and the bougie. And yeah.
It's Tuesday, no worries. Josh.
So I'm Josh. I think I actually met you during the Pitch Dingman competition. So we're doing drones for real estate, doing a drone that can do an autonomous navigation indoors to create a virtual tour.
Crystal.
Hi, my name is Crystal. I'm the founder of Chris & Co Beauty. We are a beauty size cosmetics line that delivers beauty products as well as servicing people closer in the DMV area for lash technician services.
Camilo.
Hi, you already know what I do, but I'll do it again. Hi, my name is Camilo. My business is Bolt Logistics, and we're building a drone delivery network for any business to use to deliver their goods to local customers.
Great.
Good to practice your elevator pitch anyways.
Right.
All right, Lucia.
Hi, I'm Lucy. I'm the founder of Wanderlust Wardrobe, a personal styling service that seeks to make personal styling accessible and seamless for women that would like more confidence in their clothing.
Awesome. Mod bars, whichever of you, all of you would like to speak.
Hey, we are Mod Bars, an affordable, filling, delicious snack bar that caters to individuals' dietary restrictions while maintaining the premium quality of a high-priced brand. We cater towards Gen Zs with dietary restrictions or who lead an active and health-conscious lifestyle.
Other members of his team include Wyatt, Max, and Joe, who are also on the call. Vitalize. Sankat.
My name is Sankat. I'm one of the co-founders of Vitalize, and we are building a mobile app that helps physicians and other healthcare providers to incorporate evidence-based mindfulness and resilience strategies into their busy workdays.
Jacques?
Philip, good to meet you. I am one of the founders of SoCo, and we believe that people have the right to be able to provide for themselves, and we enable that by giving them access to in-home garden that grows about 3.5 pounds of greens a week, enough for a single person to subsist off of.
All right, and then Mohil. Mohil, you're muted.
I'm Mohel, founder of OcuClips. It's a universal to all frames clip-on cushion that alleviates discomfort for glasses wearers when they wear headgear.
And that's the crew. So
Great.
we are in the second week of financials. Thanks for getting us kicked off.
And so I understand you all have talked about the mechanics of modeling and things like that. So I'm going to try to stay away from that and more talk about 40,000 foot, what to put in your model, and then how to build it up, where to focus your time and where to get it, make assumptions. So let's keep this interactive. Please jump in. I haven't done one of these on Zoom before, so I don't know the best way but interrupt. Don't be shy about interrupting, and I don't know if there's an easier way to have raise hands or something on Zoom, but whatever works, just interrupt with questions. I'm going to share my screen and have some slides here we can walk through. Oops, here we go. Let's put this in. So I'll start just with words of wisdom from Dwight Eisenhower. Plans are worthless. Planning is essential. What it means is your model is not actually that valuable in the end. It's the process that we're going to go through to build it that's what's important. So I'm going to throw this question out. This is why the slide is blank. Anyone want to volunteer? Why are you building a financial model? Anyone? Anyone? Don't be shy.
I think you're building a financial model to stay organized, and especially with business, like the focal point being making a profit, you want to make sure that that's what you're doing. And also like counting for your expenses, counting for like everything that you need to do. So.
All right, that's a good one. Keeping track of your finances, that's an important one. Anyone else have why? You're doing it because Lottie told you to.
Yeah.
No, is there?
Yeah. So we're building ours to see if our company and our product is financially solvent at our current price point.
Okay. Right. So you're trying to understand the future. Does this work? Right. There's good reasons, and I think I would frame it that the model is your sketch of your business, right? You're trying to figure out, particularly Max said there, what works, and understanding this will be the record of, as Chris was saying, are you going to make money, right? Does this model make money? And what you can do with the model, and you can be very complicated and track every penny as you go forward. I think that's important for the historical record, kind of accounting. But what I'm thinking about now is your model of looking forward, right? These are the things you don't know. And it really is like drawing something out on a piece of paper that you're about to build and say, ooh, is this going to fit in my living room? Or is this going to, if I, what are the big assumptions that I need to understand? And what is going to determine whether this works or not? So your goal really is identifying the key assumptions. What are the things that are going to drive this business, and what do they need to be? How do they work, right? Does it go around? So again, we're gonna make this interactive whether you guys want to or not. So some of you, anyone want to volunteer? What are the 3 or 4 most important assumptions in your business model? And this is gonna be unique to your business. So it's what are the things that really drive your business? Max already had one, which was his price point, right? Anything else for other people?
I have one.
Great.
For us, it'll be primarily, we assume that people want to keep buying the seats and keep using the machine. That'll drive long-term consistent revenue.
So whether customers churn, whether they stick with you or whether they go away. Is that that's a huge one in businesses like yours. Anyone else? Think about your business. What are the 3 or 4 things that make your business work or not work?
For me, it's one of the biggest ones is like the cost of the actual hardware to set up the logistics network, and how long does that take to pay back?
Yep.
Yeah, mine is pretty similar to Camilo's, where it's the kind of the cost of goods sold, how much each of the electronics within each product cost, and then what are the like MOQs, what are the bulk order pricing, and how all of that plays into, as we scale, how the price point changes.
Yeah. It's a great example. So if you didn't know where to start on that, what I'm suggesting is start very, very simple, right? What is a business? You want enough customers to pay more for your product than it costs you to make the product, to find the customer, and ultimately to deliver the product. So some things to ask yourself that will often flesh out some of these key drivers. How many customers are you going to have? And usually you have no idea, right? So this is why we're talking about assumptions. But you can figure out how many customers do I need to have in order for this business to work? And then you can say, well, how do I get there? But that's a really important, an obvious assumption maybe, but a really important one is how many customers you're ultimately going to have, how much will they pay? How much does it cost you to make it, right? Both Camilo and Josh referred to that. What is your cost of goods to deliver, for either making the product or buying it, or either case, depending on the case. But how much does it cost for you? This is a really important one. A lot of times is overlooked. Is how much does it cost you to acquire a customer? So that means how much is it going to cost you to get that person aware of your product and willing to buy? And that's your sales and marketing costs and all that. But for the moment, we're just going to think about it as a single number. How much does it cost to deliver the product? And that can be in the case of drones, right? Since I know Camilo's business model, the drone has to go run trips for the customer, and that's going to cost money to maintain the drone as it goes along. So once you have that service, how much is it going to cost to get it to the customer, and then how much is it going to cost to support them on an ongoing basis? I put the last one in brackets because at some point there's a cost to just the functions of your business, finance and accounting and legal and all that stuff. But for the most part, you can ignore that for now. So I kind of put it in. The other ones are far more important. So as you think through those different aspects of your business, one really important thing is separate your fixed costs from your variable costs. I don't know if you talked about this in the financial modeling class, but there are costs that are fixed. For example, if you have a website, an e-commerce site, you have to pay a certain amount every month for hosting the website and the infrastructure there, regardless of whether you sell 0 items or 1 million items, right? So that's a fixed cost. A lot of people tend to be fixed costs. Those are things that whether you're selling 0 or 1 million things, it's the same cost. Variable costs are costs that increase as you sell different items. So obviously cost of goods sold, but also things like customer support. The more customers you have, the more you're going to have to spend on customer support. Those are variable costs. So understanding which of those is which is important as you think about modeling the business. If you're in doubt, it's probably variable, meaning as you grow, like customer support, you say, well, it's fixed. I'm just hiring one person. Well, typically as you grow, you're going to add people. So you're going to fill that function. So there's a finite number of customers that one person can support. The other thing is, for now, as I said, start simple. If customer acquisition cost, just call it customer acquisition cost. Don't worry about whether you're buying Google ads or paying someone to run around with street signs, whatever you're doing. It doesn't matter how. For now, just think about it as a bucket of cost. And then as you refine it, you'll figure out the details of what's going to go into it. But for now, we're just going to keep it in high-level buckets so that you can think this is really a very, very simple model with your base level assumptions to understand whether your business works. And last, I would say, don't lose sight of the forest for the trees. And I'll use an example here. Company came into my office once, and they were just a raw startup, maybe a little further along than you guys, but not a whole lot. They maybe had 10 people. They didn't have any customers yet. And they had this really, really, really complicated financial model. I was talking to someone about it, and they were going through it, and the person who's going through the model said, this is crazy. They're assuming $39 of rent. It's at least $41 a square foot in DC. And I started laughing, right? That kind of detail is completely irrelevant at this stage of the business. You are not going to win or lose based on whether your rent is $39 or $41 a square foot, right? It's, the things that are drive your business, that's where I want you to focus. So it's easy to get caught up, in the filling out these very, very minor details that just don't matter. So that's what we're encouraging you to right now is just focus on the big assumptions and keep the model simple so that you can keep your focus on those rather than getting caught up in detail that really is not going to determine whether you succeed or fail. So this is an example. This was actually one of the companies I worked with in Terp startup, I think 3 summers ago. Everything down below is just calculated. So you can, that just runs the numbers. But we came up with, I think it's about 10 numbers that were going to drive their whole business. And those were our key assumptions. And you see some of the things we talked about. It was a SaaS app. So one of you mentioned, I think Jacques mentioned the SaaS app. So monthly churn, huge, right? Churn is how many customers you lose every month from a subscription application. They had freemium, so you had paying customers and you had free customers. Paying customers got a lot more support, so they cost twice as much. You had to decide how many you want to pay, how many not. What are your fixed costs? And again, see your fixed cost. We just kind of made up a number there. It was rough based on some things, but it wasn't. If you don't know what it is, just put something down on paper. A lot of these were wild guesses. The percentage customer growth, we had no idea they hadn't any growth yet. Percentage affiliate, that's that was a revenue share model, and the revenue per affiliate transaction. So this took us, 20 minutes or so. This is the kind of business model you can put together at this stage that just focuses on what are those key, 8, 10, whatever the number is, assumptions. What are those values that are going to drive your business? And then you can just play with them, right? As you change those numbers, you see how it flows through. In this case, we just did a financial plan for a year that's all calculated from those top 10 numbers. So as the CEO the founders were playing with it, they could just change the numbers and see what mattered. And that's the important part is you're going to find that some of these numbers drive your outcomes dramatically, and some of them really don't matter. And that's the goal, is to figure out which ones matter. So I listed here some of the things that often are the most important variables for different kinds of businesses. So hard goods businesses, a number of you have physical goods, right, that you're selling, whether that's sweets or nails or what, those are all hard goods business. So your COGS, your cost of goods sold. So for a food, that's mostly actually more of your time than it is the raw materials, but it's still part of that. You have advertising costs, but your hard good business tend to be low gross margin, and so it's really the variable cost. You want to make sure that gross margin per each item is what is going to drive your business. There's some things to manage: inventory levels, warranty. Those are going to be secondary. It's mostly going to be advertising costs and margins. None of you are perpetual license software, so we won't worry about that. Subscription software business, right? A couple of you. Customer acquisition cost and churn are the big ones. Average revenue. So you can kind of just, there's 4 or 5 there that drive those businesses very easily. Services, I think I heard at least one services business. That means you're providing a service that can only be provided by you in your time. Those are great businesses when your people are utilized, meaning they're actually providing a service, but expensive when they're sitting around not doing anything. So your utilization rate, which is what percentage of the time that person is working with a customer versus doing it themselves, becomes really important. Brick and mortar, I don't think any of you are actually building brick and mortar stores, though some of you may be considering that in the future. Very, very high upfront costs, right? You're got a lot of money tied up in the building itself. And then in a brick and mortar store, you have inventory. You have to have inventory in the store so that when people come in, they have it. So that ties up a lot of cash flow. And you have and real estate costs and so forth. But I think for most of you, it's going to be hard goods businesses, services, or subscription software. Are there any questions as we go along? It's a quiet crowd this morning. So which one of these matter, right? And what I'm doing, so going back to this model here, what we did is after we built this model, quick and dirty model, you start tweaking some of those numbers and you realize which ones matter and which ones don't. For instance, fixed costs, they don't really matter in this business. They were low enough. We felt like within reason, that was not going to be a big driver for them, at least initially. So you can figure out what's a reasonable range, even if you have no idea, right? What would be a reasonable range for these numbers, and put it in there and see which, bounce around those values, and you start to see, wow, there's a couple numbers that really matter here. And there's a couple that don't. And so the ones that don't, you can be very uncertain about them and it doesn't matter, right? If your fixed cost is 2,000 instead of 1,000, doesn't really matter, right? If your average revenue is $10 instead of $5, matters a lot as you start to get a lot of customers. So what you can do is this flushes out quickly which numbers do you really need to understand and which ones can you be uncertain about for a while. You can be, if you're close, it's fine. It's good enough. It's not going to matter. And the numbers that you also are looking at are the values they need to be to make the business go around? Do they work, right? So I was working with a company either last summer or the summer before, I forget which, where when we did this, we quickly realized that they couldn't make money unless there was a delivery service, unless they were doing hundreds of deliveries a day at the current pricing, which was very unrealistic that they could do. So, that this exercise can also flush out very quickly. Hey, does this even work, or do I need to make some changes? Push on some of these assumptions, and you'll find that some of the numbers matter a lot, and some of them matter very little. And you want to focus on the ones that matter. And you're also trying to figure out at this point, does your business work? And this is why you keep it quick and dirty for now, and just, you may find that you need to make significant changes in your business. And that happened with one of the companies I was working with last summer in Terp startup, or the summer before, I'm not sure which, but it was a delivery service. When we started modeling it, you realized it needed to have hundreds of deliveries a day in order to make money. That was clearly unrealistic. And so the model was the first time it flushed that out, the numbers, and said, okay, we need to think about a different way to make money, or a different way to price this or something, so that the business model works. So that's what you're trying to do here. Hold on one second, let me see if I can get this reconnected. But so the question is for the ones that do matter, once you've identified what matters, how do you decide what those values should be? Do you have do you have a way to figure out what a good guess for a value is, right? So if you have direct experience with the business, that's the best, because you've learned something about what that value might be. For instance, if you've started to sell something, and like the Sweets by Caroline, I think you've already sold a number of them. So you kind of know, okay, we already have shown that people are willing to pay X dollars for this. But if you have no idea, do some research. So I think the best place to go is look at other similar companies. So if there are companies that you know of that are, whether you have friends who are entrepreneurs, those are great sources of data, because those are more reflective of companies at your size. How did they make money? How much did it cost them to acquire a customer? How much were they able to price it? If you don't, another source, if you don't have that, is public companies. So public companies, obviously, they're way bigger than you are by orders and orders of magnitude. But still, their fundamental economics aren't that different, and you can understand a lot by looking at them. So if you're looking at customer acquisition costs, if you're a consumer app, well, look at some of the consumer apps out there. How much does it cost them to get a customer? And that's a great starting point. It's probably not exactly what you're going to find in the market, but it's a good starting point if you have no idea, right? It gives you an order of magnitude. Say, hey, it costs Facebook $75 to acquire a customer. Well, maybe that's a good starting assumption for you. Maybe it's not, but it's going to be close, right? It's going to be somewhere. So definitely encourage you to look at public companies' financials. They're a great source of information to understand what the dynamics of some businesses are. And if you can't find a business that's exactly like yours, hold on, I'm going to switch back to the computer.
This meeting is being recorded.
My computer came back online, so I was killing that one. And I can go back to sharing the screen. Except that my screen share is turned off. But all right.
I've made you a co-host. You should be able to do that.
Now I can get back to sharing the screen. Sorry about that internet disruption. So here we go. So in terms of making your assumptions, again, first focus on the ones that matter. And those are the ones where you want to narrow down the value as much as possible. As I said, public companies are a great source of information. Even if it's not exactly what you do, because no company is doing exactly what you do, anything that's similar to your business and has a similar business model just gives you a starting point, right? For instance, in one of the first companies I advised 25 years ago was AT&T, and they were doing getting people to get cell phones, right? Their customer acquisition cost was in the public domain was $100, just over $100, right? So they that number's always stuck with me for consumer models. If you have a broad consumer base, $100 to attract a customer is a decent starting assumption. But looking at public companies, even if you're not even if you were a software company, I use that example because AT&T was a company trying to reach consumers. So you think, hey, what does it cost to reach a consumer and get them to buy my service? It's $100, some plus or minus. And you may find consumer apps out there that are lower or higher. But my point is, don't get frustrated because you say, well, I'm doing exactly this, and there's not a public company that does exactly that, so I can't learn anything from public company financials. Absolutely not. Anything that's analogous to your business in any way, shape, or form in the business model gives you data that gives you a starting point for what those assumptions can be. And in the worst case, make it up. That is not a bad thing, right? It is, hey, I have no idea what this number is, but I'm going to just guess based on what I know, and I'm going to start there. And then, and this is the most important thing, is test those assumptions as quickly as you can, right? Whether you have very good data about what other companies are doing or whether you're making it up completely. You know what the 4 or 5 numbers are that are going to drive your business. That's what we've identified. And you want to get out there and test them as quickly as you can, right? How much is it costing you to acquire customers? That's going to be a little bit tricky one because it tends to be very easy to acquire customers in the beginning because they're your friends, and then it gets very hard. And then it gets a little easier. But start testing those assumptions. Get out there and start selling stuff. Quote people different prices. See what they say. So you start to say, hey, what's the price point? Make sure you're tracking users if you have an application so that you see how often are they using it, how many of them rolled off at the end of the first month. And so you start to put real data behind that. The faster you can narrow them down, the better you can adjust the business, right? If you're finding that in that first month, 100 people sign up on your app, but 50 of them leave by the end of the month, that tells you where the work you need to do is. You've got to make sure you retain them better. Do any of you have assumptions that you're trying to fill in your model that you have no idea what to put in there? No, you guys have your models all done. We should have skipped today.
I have a bit of a worry, yeah.
Sure.
I'm worried about my CAC because our customer, our service being an esports organization is advertising to our audience, right? That's our service. And we have to gather an audience before we can reach out to sponsors and say, hey, pay us monthly. So our CAC is not only going to be high, but I'm not going to be able to figure it out until I accomplish getting my first actual sponsor, because every esports org I've spoken to has given me a very blunt and abrupt, we won't be telling you about our sponsorship deals in any capacity.
Right.
So my concern is not knowing, is that going to cost me $3,000 or is that going to cost me $15,000 to build enough of an audience to land my first sponsor. And so, yeah, so I'm a bit worried about making that assumption when landing on a specific number.
Yeah, so there's two things there. One is your classic marketplace model, right? You have to build up one side in order to get the other side to buy. One assumption to think about in yours is what's the critical mass you have to get to make that work, because that's usually where marketplaces struggle, is getting the critical mass that then starts the flywheel going. So that's one really important assumption. If you can't figure out the sponsorship dollars, take your best guess. Is there any way to back into it? So I know the financials of some NFL teams have been released in some form when they were going, they shouldn't have been, but they were leaked in different cases when companies were for sale. There are companies that have been raising money recently. The PLL, the Professional Lacrosse League, I know was out talking to private equity investors last year trying to raise money. If you know any friends in private equity, they may have seen that deal and have numbers. So I would think about who may have had information about this. So are there investment bankers that either are the Maryland ecosystem, for example, or the Dingman ecosystem that deal with the world of sports? It's a little bit of a unique world, but you actually have some big players in DC with Leonsis and Ledecky and so forth that are active in the buying and selling of sports teams. Can you get to anyone in a friendly through the UMD network that has any data there? Or has there been any data that's been publicly released? I'll try that. And
yeah, thank you so much, because already when you were talking about who to talk to, I've thought of 2 people that I want to write down.
Because I think the economics of professional sports teams, there are a lot of people who study that. And so I think there's probably some data out there, even if people, if you ask a company, hey, tell me what your sponsorship numbers are, they may not tell you, but you may be able to find data out there because it is a topic of study. And I don't know if the NFL leagues are relevant because there's such big money makers, but possibly the minor sports, women's soccer, men's lacrosse, professional cycling, the things that are less driven by TV contracts than NBA and NFL and MLB. They may be a better analog, but as I said, figure out what you can.
Yeah, thank you. That was incredibly helpful.
Anyone else struggling with a key assumption that they've already figured out as a key assumption, but they don't know where to start at what it should be? No.
I have one.
So.
Oh, go ahead, Sarah.
No, it's fine. It's fine. You go.
Okay, so Josh, then Sarah. How about that?
Okay. Yeah, so my big assumption, one of our assumptions, is that what we're doing now, something that I mentioned previously, was getting backer agreements signed by potential people who are interested in purchasing the drone when we launch. So these agreements are saying that Jason, whatever, will buy your drone for $1,500 when you guys launch at the end of in the fall. And so we've got a number of those signed right now. And so it's kind of a good signal that shows that there's people who are willing to pay that price point for our product. But the question is, how much of that will actually convert into buys?
So I was talking to Camilla about this the other day. The challenge you have there is customers lie to you all the time, right? Particularly when you're a student, right? Like if you say, will you buy this? They mean well. It's not because they're bad people. They mean really well, and they don't want to hurt your feelings, and so they say yes, right? And this happens at, I worked on a project a long time ago when in late 90s when the energy power grid was deregulating. We went out and interviewed people all across the state of Pennsylvania and said, would you pay 10% more for green power, for environmentally friendly power, right? everyone said yes, not everyone, but a huge percentage said yes, because that's who they thought they were. If you ask them, they say, of course, I'd take care of the environment for next year. I'd pay a little extra to do that, right? When we actually launched the product, the take rate was like 0.1%, right? No one who'd said that actually followed through. So what I would try to think about is, you actually have them signing a piece of paper. That's actually pretty strong commitment. So I would guess that you have a fairly good follow through on that. But the other way to think about this is think about how you ask the question to people. If you say, "Will you commit to buy the drone?" So that's, you're getting a pretty firm commitment. So I think you can have fairly high confidence. But if you ask the questions in a way that doesn't make it obvious that you want them to buy the drone, right? That you're the one who benefits if they buy the drone, sometimes you get more honest answers, right? If you were to approach someone and say, "I'm a student at the University of Maryland and I'm doing research about a drone project," right? Which is true, right? I'm not saying lie. But if you don't say, "I'm trying to sell a drone, I'm doing research about drones for a Dingman project," and they view that as a academic data collection exercise, sometimes they'll be far more honest, right? Because they're not worried about hurting your feelings. In fact, they want to give you the most accurate answer they can, because they're trying to help you. They think that's the way to help you as a student, right? So it's definitely something to think about when you survey customers, to make sure you're not putting them in a position where they think that the nice thing to do is to tell you what you want to hear. Or you're asking them about who they think they are, which was sort of the environmental case, right? Like, people will answer in the way that they think you want to hear, or they think they are, and their actions are often very different. So I think all of you are probably doing customer discovery over the course of this summer. It's a really important thing to think about is how you pose questions and whether you're getting back what you want to hear as opposed to accurate answers. So if you could reach out to some more customers and sort of gauge whether they're as excited as the one you've already talked to. The other thing is, you got signatures on a piece of paper. If they back out, you make them feel bad about it and try to increase the close rate. But I do think that is a very strong indicator that they've actually signed a piece of paper. So a fair number of them are probably going to back out, but my guess is you end up with over 50% if they've signed a piece of paper.
Okay, over 50. Okay, so probably like 60, 55, 60, something like that maybe.
Yeah, how much does it matter, right?
Yeah. My
guess is that at this point, that initial take rate is actually not going to be a key driver of your model, right? That you have, I don't know what the number is, let's say it's 10 or 15, right? Whether your first batch of customers is 5 or 10, that's probably not going to drive the long-term economics as much as how much does it cost to acquire additional customers.
Got it.
Right. So I think that's a very, very short term. It drives a lot of short-term economics, but my guess is in the long term, it's actually not a critical assumption for your business model.
Gotcha. So it's more important to kind of decide how much it costed for us to get those first 10.
Exactly. And if it turns out to be 5, then obviously the cost is double, but your costs are moving around a lot right now.
Gotcha. Thank you.
Sarah, you had a question.
Yeah, so I'm currently in the process of debating putting in a lot of money for something that I really don't have much to back up with, except just that I think that it will draw more people in. As I said, I'm going to convert my store into a mobile boutique, but buses are very expensive. So really my issue is that I would test the market. I would sort of do some research and see. I have talked to other mobile boutique owners, but they haven't really tried it any other way, so they can't really compare it to anything. Really, I've been selling online and that's been doing fine, but every time I sell in person, I sell a lot more things. So I know that that's something, but it's hard to balance the intake versus how much I will be spending on the truck in order to see sort of how I'll pay that back and if it's worth it and all of that. And I was thinking about renting a truck and trying it out, but a lot of it will be sort of the design, the style. They have museums now that make money just because they are Instagrammable. And so really that's like half of it is the experience of shopping via a mobile boutique. And that will require renovations and things like that. But I found pre-renovated trucks that are, you know, still a lot of money, but it's sort of balancing sort of how I can justify spending $10,000 when I'm not really sure what I'll get in return.
Right. So I can't tell you whether you should spend the money. That's up to you. And unfortunately, I think it's a lot more than 10 grand for a lot of the mobile trucks. I know the food truck business a little bit, and those are 100,000 plus. Maybe that's got a lot of kitchens and stuff. So hopefully your van is less, but still, it's a significant outlay. What I would encourage you to do is this is exactly the purpose of these kind of models. Is if you break it down and say, okay, you can research the price of the truck. What's the upfront price of the truck? And don't think of the model as telling you what your business is going to be, but telling what your business has to be. So if you know the upfront cost of the truck, how much do you have to sell? And you had vintage clothing, so there's you know, what's your margin per, and you can figure out how much you need to sell in order to make that truck worth it. And is that realistic, right? So first think, what does it need to be to make the numbers go around, right? And that's pretty straightforward. And again, the quick and dirty models. And then you start to test, does that make sense, right? If it's 10,000 pieces of clothing a day, obviously that's not going to work, right? Your margins are too low, you know, something's not working, right? If it's 10 pieces of clothing at each stop, you know, maybe that's realistic, right? And your experience may tell you whether it's between 10 and 100 or something, but what you're going to find is, you know, the model is going to tell you what are the most important assumptions that you're making, and then is there a way to test those assumptions before you buy the truck? You know, I think that probably the two biggest ones for you are going to be margin per item and number of items you can sell in a day or a stop, right? Is there a way to do a pop-up tent? You know, it's not as good, but it would at least help you see that, right? If you did a pop-up tent where you think you're going to do the truck, and you could say, hey, I'll probably do better with the truck because it's a better experience. But with a pop-up tent, I sold 50 items of vintage clothing. At least that tells you that the answer is probably not 20 and it's probably not 150, right? And then is 50 to 100 or 50 to 75 enough to make the truck worth it? So there's ways, think about ways to test, right? Like once you know what those key assumptions are before you drop a lot of money into it.
Okay, cool. Thank you.
Sure. And also I would say for folks who are looking at larger capital outlays, I know with Camilo, there's a cost to building the drone and so forth. You know, if you don't have that money yourself and you need to get it from someone else, the more you've proven out these assumptions, the easier it will be to get money, right? So if you had done a pop-up tent and you sold 100 pieces of clothing in a pop-up tent on a Saturday afternoon, you could go to someone and say, look, I've already demonstrated that there's demand here. I can sell clothes. I just need the truck. And would you finance the truck? So, which gets to where do you go from here? You know, I strongly encourage you to start with a super, super simple model like the one I showed, you know, 10 numbers that drives your thing. Narrow down those values for the key assumptions like we're talking about, and then you can fill in the details, right? As you get more comfortable that this is the business model you're pushing forward, then you start to fill in, you know, how much is it, if I buy Facebook ads, you know, that's going to be X. If I put ads in the school newspaper, if I start my website, then you can start fleshing out that detail. But start simple and try to narrow down those key assumptions before you get caught up in the details. The other thing I definitely encourage you to do, particularly for these kinds of businesses, if you have aspirations of taking it larger, is make a second version of the model, but with the business a whole lot larger. $1 million a year, $10 million a year, pick a number, right? And what that forces you to do is think about what this business actually looks like when it's big. And employees are doing the work, right? You're the CEO. And so it's very easy now to not value your own time and not realize, hey, if I was paying a salesperson to go call on all these stores, I wouldn't be able to make money. You know, that flushes those things out. And the other thing is, you know, what's going to break? If you tried to sell $1 million a year or $10 million a year, what part of your business wouldn't work? If Sweets by Caroline, suddenly you're talking about, industrial kitchens and things like that. How does that change the fundamental dynamics of this business? If you're vintage clothes, right? That's a whole lot of clothes. Does that mean, do you need to have multiple locations? Do you need to have, and what does that mean? Then you have to have employees at those locations. So you may not have aspirations of being a large business, but even if you don't, it's worthwhile to try to model the business at a much larger scale. And just so you think through what the different components of the business are. And I think you'll find that there's things that, you're wearing a lot of hats today, and at a much larger scale, you start to break those up into functions. I need a salesperson, I'm doing marketing, and that also can help you go back to your original model and say, ooh, where am I? Are there things that I'm missing? Are there things that I need to get ahead of now? And a very constructive exercise that I definitely strongly encourage you. Again, this doesn't have to be complicated, but the simple models. Last, I would say, don't fall in love with your model. It's not a crystal ball, it's a map. It's kind of an expedition plan, right? You don't know where you're going. You're setting off in the wilderness and you're saying, hey, we're assuming we can catch 10 fish a day in order to feed the troops. But if I can't, I'm in trouble, right? It's your plan. So I'll leave you with a quote that this was actually in the 70s, but it sticks today about your Excel. And I'll let you guys read it. I won't read it out loud. But basically, don't fall in love with your model. He says it much more eloquently than I do. And Q&A, you guys haven't interrupted with a lot of questions, but are there questions about either your specifics of your business? I think we're doing office hours this afternoon to dive into specifics, but if you have a question, particularly if it's something that might help other folks, you think other folks might have the same question, please jump in.
I'm going to kind of seed a question. Sankath and Viraj, I know you guys have gone back and forth on who your customer is. Maybe you want to explain that to Philip and see if he can weigh in on an idea.
Yeah. So we just signed up for our office hours, but we can 100% talk about that. So actually that leads into a second question. So we are a physician wellness app. And right now we are considering two major revenue streams. The first of which is marketing to individual physicians and other healthcare providers. And the second is securing contracts with hospitals and or healthcare systems which have multiple hospitals under their lens, such as the medical system of the state of Maryland, which has over 12 hospitals under the big banner. So one of the things that is really central to that, since we're working in an app model, is churn rates. Because let's say someone downloads it for a month, how many people after the first month would still be using it? Or then after the year, if we're going in 1 year increments, what's the churn rate over a year? And of course you can find industry data on what average churn rates are in certain sectors, but how would we, in your mind, account for variable churn rates when making these predictions?
So with any business like this, churn is one of your single most important metrics. So one thing is just thinking about what is the upper bound of churn you can afford, and it's probably less than 50%, possibly less than 10%, in terms of a long-term business. So that's one way to think about it. And then basically you're setting a bar for yourself, and as you go out into the market, you're basically, that metric is one of the top one you're looking at every day. And you're going to mess up early on. And you're probably going to do some things that cause high churn. And then you just have to figure out how to react and correct, and always keep that in front of you, like your warning sign. It's very difficult to predict churn up front, right? But it is usually very easy to figure out when it gets bad, right? Like what is a churn number that is too high for me to absorb? And so then you're basically every day fighting to keep that churn number below the danger mark.
Yeah.
And the other thing to think about is, how can you keep some people want to acquire lots of customers and have a high initial churn rate, that you can look at churn as who stays, or you can look at churn as who stays past, say, 60 days, right? And you may absorb a lot of the early ones as a sort of a customer acquisition cost. We're putting it out there. We know 90% of people aren't going to stick. And then what you're really focusing on is the churn rate of the ones that stay past 60 days. So that's another way to think about, sometimes people view the initial churn just as, unconverted customers. So that's kind of more your CAC than it is your actual churn.
Because we looked at one of our major competitors, which is the meditation app Headspace. And Headspace, post 60 days, after 60 days, less than 10% of downloads are still using it. But they've been an incredibly successful business.
Right, so that's an example. That's actually one of the ones I was thinking of, right? Yeah. What they're saying is we want everyone to try it.
Exactly.
And we don't care about that churn. I mean, we'd like it to be better, but they don't really care. That's customer acquisition cost. And then they want the ones that stay to be really sticky. And they make money off the ones that stay. So I don't know with Headspace when you actually start paying, but
so
they also don't care about the free customers, right? If you're doing a free trial,
they have a lot of different ways. You can either pay monthly, you can pay $95 a year, or you can pay $350 for a lifetime plan. So it's interesting.
Yeah, well, those are just cash flow games, right?
Yeah.
They're trying to pull their cash flow in. But I guess it's the same thing.
So I actually want to piggyback off of that. How do we also account or predict for referral rates? So let's say we have a physician who downloads the app and then they were satisfied. So they're part of the 10% or 5% that stays with our app. Is there a way that we can get a solid number of like how much they're going to share the word, how many of those that they share the word about as will download the app, the free version, and then how many of those will potentially download pay for the full like annual subscription or monthly subscription?
Right. So I'm gonna give you two answers to that. One is it probably doesn't matter today, right? What matters today is how much does it cost on average to acquire an ultimately paying customer, right? The path there is then something you experiment with, right? Referrals are just one path to that. So if you can guess right now, get an estimate for what it's going to cost you to acquire customers, I would think about that as the assumption that you're trying to refine. And then you can play with things like, most apps, if there's a virality to them, that helps bring down their cost of customer acquisition. Referrals, like you're describing, don't tend to move the needle too much. So virality is better with something like, I'm trying to think of a good example. Even a Dropbox, right? Someone says, hey, I'm going to share a folder with you on Dropbox. When it first came out, people were like, wait, what's Dropbox? Oh, you download it, it's really super easy, right? So that the fact that the referral forced me to become a user, a free user, but nonetheless forced me to become a user, those tend to have a much stronger dynamic. WhatsApp, right? Any kind of communication app. I have a friend who I lived in Germany for a while. A friend in Germany, so they all use WhatsApp. So he says, oh, hey, we should text on WhatsApp because they have high rates for their actual texts. And I say, what's WhatsApp, right? But then in order to talk to him, I become a user, right? Those kinds of viral models have much stronger influence on your CAC than a referral model. So I wouldn't really stress or waste your time trying to model, hey, every user talks to 10 other users and 1% of them convert. Like you're not gonna get enough customers that way likely. So I would just think about whatever customer acquisition you're doing, marketing or whatever, that is gonna reinforce it, but it's gonna be in the noise in terms of the effect on the economics. You're still gonna have to market. And it's just, I'm more primed for your marketing if I saw the app on your phone, but I'm not that much more primed, right? So I just wouldn't get caught up in those details and just think about overall customer acquisition cost and, what the best ways to reach people are.
Yeah, and that makes sense. And I'm really glad you brought that up because I do think now that I'm thinking, like the first example I thought of was Venmo, where a lot of my friends are, trying to pay for my food or something, and I'm forced to download the app.
Right.
To
So
make
that has a
that
network
exchange
effect.
happen.
Now you have Venmo on your phone, and now
exactly.
It's much different.
Yeah, and I think that's definitely something potentially possible in our app because we're catering to a very niche population, and so I think word of mouth marketing and just being like, I'm sharing a message with you on this, or sharing different progress updates. I think I'm glad you brought that up because I see potential in there, and we can think about that.
So I want to be respectful of time. It is now noon. We'll let you go ahead and break for lunch. If you're like, wait, I had another question. It looks like Philip might still have an office hour spot open. So go ahead and nab those before someone who is quicker than you and might be going to get lunch nabs it. Thank you, Philip, so much for this talk and for taking the time to meet with us today. We really appreciate it.
I hope that was helpful.
Thank you.
Thank you.